Good morning. Welcome to the XM.com weekly market update. And we're joined once again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
These numbers, the Australian CPI came out last week, down significantly, which should be good news for the Reserve Bank.
I would think so. I mean, that's a very big decline, and we've got a meeting in about 4 hours, so let's just see where they roll. But 37% probability of getting another rate rise. I'm erring in that side because they've beaten the analysts' forecast for the last 2 months, and I think they'll get the trifecta today, 3 straight months of rate rises.
Yeah, and they certainly, they need to get these rates a little bit higher to get this inflation rate down. So that should feed into the Aussie dollar as well, trading at that high 66 range at the moment. So
been choppy, hasn't it?
Yeah, a bit of activity there, which is good because it was pretty...
Great for traders.
Yeah, it was like we spoke a few weeks about how it was sort of pretty much range bound, wasn't it?
Absolutely. It was in that channel, and now we've just seen a little bit, and it hit nearly 69, and I'm thinking maybe we're going to hit 70 in the latter part of June anyway. It tailed off, and it really came under a lot of selling pressure. So it's dynamic to trade. There's no shortage of entertainment and enjoyment in the Aussie.
Yeah, 70 seems a long way off though, doesn't it?
It does at the moment. It sure does.
Who knows? And particularly with China as well. We look at these numbers, the producer prices and consumer prices down significantly. And I think coming out of the COVID lockdowns, I think a lot of other global economies were hoping for some huge stimulus out of China, and it just hasn't eventuated.
No, I really thought, and we discussed that in depth in, going back to March after Lunar New Year, and they came out of the blocks quickly then, and I thought under COVID, really, we're going to see a ratchet up, but no, it hasn't produced, and they've had very strong demand from an iron ore perspective in Australia. So that's been a good sign, but global demand for finished goods coming out of China has been poor, and it's going to be an interesting point in time. Does China export their way out with cheaper goods and really take a bit of a haircut as far as price?
Yeah, so once again, this is another indicative statistic really, the PMI number sub 50, which is effectively negative territory.
Well, that's right. And for 3 straight months there. So, when you're looking at that May, June, and where we're looking in July.
Yeah, when you look back over 12 months, there's only 2 months there above 50.
Yeah.
So, now, Chinese stocks, if we look at these, a lot of these ones are down for the year, like JD.com is down significantly. Alibaba is flat. The CSI 300 is flat. The only one, a bit of a standout there, is Baidu, which is effectively the Google of China.
That's right. It's been strong.
Yeah, the red line, that's the NASDAQ.
NASDAQ's been on fire. It's been extraordinary, and let's see where best first half, I read in the Financial Times, best first half since 1983 for the NASDAQ.
Yeah, 40 years or something.
So it's been extraordinary. It really was extraordinary the first 6 months. And let's see what the next 6 months do. We've all got our opinions, and I'm not going to go there today, but we're 6 months from glory, mate. We'll be looking at those numbers together.
There's a chart. I might include that chart next week, actually.
I look forward to it.
There's a chart of going back 100 years. Yes. Once you've had a huge sell-off year, what the next year looks like.
Yes.
And occasionally you'll get 2 down years, and pretty rare.
Yep.
But when you've got 1 big down year, the next year is...
normally sunshine.
Yep, and it's, well, we're only 6 months in.
Yep, that's it.
Plenty of sunshine.
4th of July, and wish all of the people watching this in the US and everyone around the world happy Independence Day.
So, oil. Plenty of activity in the oil market. Interesting chart here, where the US is one of the biggest producers, where I think globally most people would have thought the Saudis, but
that's right.
Clearly not.
Clearly not. And what the previous administration did from 9 million to over 13 million barrels a day as far as production from 17 to 20 was extraordinary. And then shutting down the Keystone Pipeline and doing a couple of other things that really crimped supply or production. And anyway, all I'll say is this: President Trump, I heard him in a recent rally, said we're going to drill, baby, drill. So if that's going to be the case, I think he said at one point he'll outdo Saudi and Russia together as far as production, and they've got plenty of oil, the US.
Yeah, it sort of safeguards the
well, it'd be good for price.
Yeah, sure.
Because you said, and you hit me between the eyes when we were off screen. You just said the Saudis looking at cutting production in August. So this is the great dilemma, and possibly Russia doing the same. They want higher prices. Yeah. We've said it for a while, and that's going to be catastrophic for inflation if they ratchet that down.
Yeah, and looking at those prices now, we've got The Brent just sub 75,
Yep.
WTI just over 70, but those prices, they're off over 30% for the year,
Yeah.
or for 1 year.
Yeah.
This-
Oh, it's monstrous.
So with this talk overnight with the cutting the barrels, obviously the Saudis need it pretty much $80 plus.
Yep.
To balance the books.
Yep. Well, they needed it at least that for with a tailed off dollar. They probably need 85.
Yeah.
Because the dollar's fallen so heavily at 114 when they were saying they need $80 a barrel. That was 114 that US dollar index. Now is at 103 or 102.
So, yeah, but the chart tells a story there.
Yep.
So.
Successive quarters of negative growth.
Yeah, and finally, just now the half year is done. If we look at the US equity markets, NASDAQ up 38%, S&P up around 15%, and the Russell, which is your small to mid cap index, sub just under 7%, which
Still not bad.
just under 7 is not bad. If you can replicate that for the year, then you're talking
outstanding.
around 14-15% is a terrific year. So,
And let's see where the NASDAQ runs in the next 6 months.
yeah, well, you know, those I know there's about 7 or 8 stocks has driven
Oh yeah,
a lot of
yeah.
that.
We've discussed it every week, and we'll see where they run.
Yeah, when do the fund managers that are not in get nervous?
They'd have to be nervous now, mate. There'd be people that these guys they wouldn't be sleeping.
No, you wouldn't want to be short.
No, no. And if you're not in now, you won't have a job. I reckon you'd lose your job.
Yeah, and if they're not in and they get in, that's just going to maybe not send it up another 30%, but it will certainly support it. So, yeah, an incredible sort of half year for the NASDAQ anyway. So,
Yeah.
Anyway, we've got plenty of numbers coming out in the next week or so.
Oh yeah, non-farm payrolls this Friday. We've got the rates today in Australia. We've got commentary from the ECB. We've got the Chinese numbers, Japan yesterday. So there's no shortage.
No.
It's an action-packed week, and Bitcoin's still over 30,000.
Okay, yeah, plenty going on.
Yeah.
Excellent. Well, thanks again, Pete.
Oh, good to see you, Andrew.
We'll see you next week.
Look forward to it.
And that's the XM.com weekly market update.